Welcome to CoCo Finance. Taxes are not only one of life's certainties, they could be your single biggest expense. Most people view taxes as a fixed amount, and they'd be shocked to know that the tax code provides incredible opportunities for regular individuals to build wealth by efficiently planning for future tax implications and being strategic instead of failing to have any sort of tax plan. You'll be at a huge advantage. These are some of the easiest and best ways to greatly reduce your tax burden, and you'll probably be surprised at just how simple these are and how much money they will save you. Taxes are not only one of life's certainties, they could be your single biggest expense. Most people view taxes as a fixed amount, and they'd be shocked to know that the tax code provides incredible opportunities for regular individuals to build wealth by efficiently planning for future tax implications and being strategic instead of failing to have any sort of tax plan. You'll be at a huge advantage. These are some of the easiest and best ways to greatly reduce your tax burden, and you'll probably be surprised at just how simple these are and how much money they will save you. There are various commonly discussed benefits to home ownership, but one advantage that's overlooked is that it provides some amazing tax benefits. Making it a priority to maximize the tax advantages can provide a huge boost to your wealth. Generally, when you sell a piece of property, it's going to be subject to capital gains tax, meaning all the profit will be taxed. But there are some exceptions. The IRS provides an exclusion allowing you to sell your primary residence and be exempt from capital gains taxes on the first $250,000 of profit if you're single, or $500,000 if you're married filing jointly. The main caveat is that you must live in the home for at least 2 years. Just imagine if every 2 years you were able to add $500,000 tax-free to your wealth, and you repeated this process many times. Just doing it twice would make you a millionaire. Buying a home that needs some work is the most common way the average family utilizes this tax strategy, but you don't even need to buy something that needs work. Simply buying a property below market value in an excellent location can allow you to maximize your efforts. A Roth IRA can be an incredibly powerful tool because it allows your investments to grow tax-free. Unlike a traditional IRA, the contributions to a Roth are made using dollars that have already been taxed. This means you won't receive a tax deduction during the contributing year. You will still pay your taxes as normal, but when you withdraw the money during retirement, you won't owe any additional taxes. Instead of paying federal income tax of up to 37% on your distributions during retirement, everything you withdraw is yours to keep. This puts you in an excellent position during retirement, especially if you've amassed a large portfolio and will have a very healthy retirement income that will typically put you in a very high tax bracket. Roth IRAs have no required minimum distributions, meaning you won't be forced to withdraw money during retirement, regardless of whether or not you need it. Generally, you're able to put up to $6,000 per year into a Roth retirement account, and the sooner you begin to fund it, the more tax-free income you're going to have when you retire. Owning real estate is not only an excellent investment due to its potentially high rate of returns, it's also an amazing investment choice due to the many available tax advantages. Everyone needs somewhere to live, so the IRS encourages investors to provide housing by offering these special tax breaks. When you buy a rental property, you're able to depreciate the building. What this means is that you're allowed to deduct the value of the building you own on your taxes. The IRS considers the useful life of a property to be 27.5 years, so you're able to divide the value of the building you own by 27.5 and deduct that amount on your taxes. For example, if the value of the building is $500,000, you divide that amount by 27.5, and the tax deduction equates to over $18,000 per year. This is an amazing incentive because even though the IRS is assuming the building only has a lifespan of 27.5 years, of course, it's going to be much longer than that. It's worth noting that this isn't a completely free tax deduction, and without following the proper procedure, the taxes might be owed at a later date. Adding to the tax benefits of owning rental property, your taxes, insurance, management fees, landscaping, pest control, and all maintenance costs are tax deductible, further reducing your tax liability. The mortgage interest, which is often a very large expense associated with owning real estate, is also tax deductible. With all of these potential write-offs, the owners of rental properties often pay no taxes from this income. Again, even though many of the costs that come with owning real estate may eliminate your tax burden during a specific calendar year without following the proper procedure, if you decide to sell, you might be responsible for some of those taxes. So the tax deductions aren't simply free money for nothing. There are limited ways to reduce your tax burden when you're an employee, but starting your own business provides you with many opportunities you otherwise would never have working for someone else. Employees earn money. Their taxes are immediately taken from their check, and what's left over is used to pay bills. Business owners have more flexibility and can sometimes do things in a slightly different order. As a business owner, you're able to earn money, pay bills, and pay tax on the profit that's left over after paying expenses. For example, a business owner who uses their car for work is able to deduct many of the running costs. An employee may use their car to get back and forth to work, and the total cost could be the same, but they're not able to write off those expenses on their taxes. The preferable tax treatment provided to business owners often results in them paying little to no income taxes. Compare this to someone earning a W-2 paycheck where they could end up paying a large percentage of their income in tax. The capital gains rate is 0% for single filers who earn up to roughly $41,000 and those who are married filing jointly earning up to roughly $83,000. This means that for those who plan on retiring on portfolio income from the sale of assets that are long-term capital gains or qualified dividend income, they won't pay any federal income tax in these brackets. In other words, profiting from long-term capital gains or qualified dividends in these tax brackets could result in tax-free income. For those who plan on retiring early before their retirement accounts can be tapped without penalty, or for those who receive a large percentage of their income from a brokerage account, this is great news. Taxes on long-term capital gains are subject to a substantially lower tax rate than ordinary income from a 401k or traditional IRA. This means that investors have a big incentive to create long-term capital gains. A common example of a long-term capital gain is owning a stock inside a brokerage account for more than 1 year, which would result in the preferential tax treatment. Buy, borrow, die. This is a strategy that many wealthy people use. As someone builds wealth, they buy appreciating assets like real estate, stocks, collectible items, and other things of value. Real estate can provide income and stocks pay dividends, but much of the profit is made by the asset value rising year after year. But how can you access that equity without selling these assets and being subject to tax? Instead of selling and putting the cash into a savings account that pays little to no interest, wealthy individuals borrow against these assets as their value rises by taking a larger mortgage out on their real estate or borrowing against their stocks and other investments. If the wealthy have a piece of real estate that has risen substantially. And there you have it, folks. Tax planning doesn't have to be a daunting task. With a little know-how and some smart strategies, you can keep more of your hard-earned money in your pocket. Remember, financial freedom is within your reach, and a well-thought-out tax strategy can make all the difference. If you found this video helpful, be sure to give it a thumbs up and subscribe to the channel for more valuable insights into managing your finances. Thanks for tuning in, and until next time, take care, and here's to building your wealth and securing your financial future.